Everyone, my name is Ajibola Akamo. I'm an investment analyst for Nairametrics. I am here with Mark. Mark is here to talk to us about GK8. So, I've been doing my research, of course. GK8, what's it about? What are you guys into? But I want you guys to hear from the horse's mouth. Mark, tell us, what is GK8 all about?
Thank you. Nice to meet you. So GK8 actually is a cybersecurity company where we provide an end-to-end solution for allowing customers to self-manage their own digital assets. It incorporates, we have 7 patents, of which it incorporates a very unique cold vault, which is an offline solution with the highest insurance available in the market today, which is $750 million of insurance. In addition, it works together with a patented MPC solution, which is otherwise known as a hot wallet type of solution in the market. The difference between our hot wallet and other solutions that are in the market is both the security layer of it, where we're able to basically provide a layer of security that is significantly higher than what's in the market today. The standard MPC is 3 shards, which basically splits the key into 3 parts. We're able to do this with significantly more parts without affecting performance. And our MPC is actually just recently tested 1,000 times faster than what's currently in the market. And I'm not exaggerating with that number. In addition, we provide a lot of functionality around the usage. We're talking about things like staking. And in fact, we offer something called cold staking, as well as heavily into the DeFi world, where we also provide native DeFi capabilities. But most recently, we're also partnering with MMI, which is Metamask Institutional, to provide the Metamask extension together with the security layer of the GK8 infrastructure.
All right, thank you so much for that. I think one thing that stood out for me is you said your product is 1,000 times faster. Can you please shed more light on this?
Absolutely, absolutely. So the standard MPC world, okay, or the standard algorithm for MPC allows you to shard the key, or I shouldn't say allows you, but if you shard it by more than 3 parts, it has a direct effect on performance, whereby the actual solution will grind to a halt. And that's why you don't just see the standard solutions growing the number of shards. Now, in a typical Bitcoin or Ethereum world where it takes time to close the block, the standard solutions are sufficient. I won't tell you otherwise, meaning, and the standard solutions are handling 3 shards with 6 to 8 signatures per second, okay? That's the number. But since it takes time to close the block, it's sufficient. But with the newer blockchains and traditional assets coming onto blockchain, the need for much higher performance is going to be evident. And that's where you're going to hear the issues with the existing solutions, as opposed to our solution, which has our own algorithm built in, which allows us to shard it with many more keys. Plus, we were just recently tested with 30 shards handling 7,500 signatures per second. So when I said 1,000 times faster, I wasn't kidding. It's actually to that extent.
Thank you so much for that, Mark. So, what was the idea behind GK8? Like, where did the whole idea come from? I understand you guys, everybody's trying to build in the cryptocurrency space and all that, but when was GK8 created, and where was the idea from, or where was the idea gotten from?
Sure. So the actual, so most of the people in the company come out of the Israeli government, either working for the military or in the Israeli Prime Minister's office. Actually, the 2 founders, they were working for the Israeli Prime Minister's office as part of an elite unit that were in charge of protecting the assets of the country against state-level hackers. And back in 2017, when they were still working for the government, they came across one of the most common B2C products in the market that they were told it was a cold solution, if you want to call it that, and it was being used to store value. They looked at this, they couldn't imagine that people were storing value, and they went ahead and they acquired it, they purchased it. And within 3 days, they hacked into the device itself without actually touching the device, okay? They were simply, so the device connects via a micro USB cable, similar to any kind of a thumb drive or an SD card type system, where they were able to simply possess the computer that the device was connected to, okay? Because in order to do a blockchain transaction, you need to have what's called bidirectional communication, meaning there's certain pieces of mandatory information that you need to put into the structure of your transaction in order to do a valid signed transaction on the blockchain. And that's why they need to, the devices like these need to connect to the internet for receiving that mandatory data. Now, when they realized how simplistic it was, they did a lot more homework in the institutional space. And what they realized is that all the solutions in the market bar none, have the same inherent risk factor from an attack perspective. And it's commonly known as a man-in-the-middle attack, okay? Because all of the solutions at some point in the process during the withdrawal or deposit need to connect to the blockchain. And when GK8 was created, and we were created in the beginning of 2018, where our founders were able to come up with a method of being able to do fully signed blockchain transactions without the need for internet connectivity, meaning we're never receiving, our cold vault is truly offline, okay, where it's never receiving any input from the blockchain, yet we're able to do fully signed blockchain transactions and create the mandatory data that's required for that transaction standalone without any attack vectors. So from a cyber perspective, there is zero cyber risk, meaning it's 100% cyber secure. And that's why we have the highest insurance in the market. And 750 million of insurance is by far the highest in the market. And that's not a pooled insurance policy. It's a policy that would be directly in each of our customers' names.
Awesome, awesome. So how does the GK8 product, how does it benefit the average Joe? Like, for instance, let's use me, for example. How does GK8 benefit me?
Okay, so it's similar to today, where the average Joe, the B2C customer, if you want to call it that, they are using a bank to store their cash, their fiat money. In other words, they don't, yes, historically people will store it in the mattresses, but for the most part, they're using banks and institutions in order to store their assets, similar to what they would expect or our customers expect when it comes to crypto assets and digital assets. They're expecting a regulated institution or even a large custodian of sorts to actually be the ones that are holding the private keys and storing the assets. And what they expect from that is they expect these institutions to have the highest security in the market available. Plus, they want to make sure it's insured. So similar when you have a bank, as an example, a bank in the US or wherever, there's what's called FDIC insured and things like that, because they want to make sure that those assets are going to be there when they need to withdraw them. So our solution is geared for institutions. So we're providing banks and financial institutions, exchanges, and anyone that's really managing their own assets or managing the assets for customers to be able to use a solution like ours to provide the service to the B2C customers. So we're not a B2C play, we're a B2B play.
All right, you guys heard it. This is a B2B company. They don't care about the end users. They basically provide solutions for, companies like Binance, FTX, and the likes to actually secure our cryptocurrencies. And that, I think, speaking on security, right? There's this report that I recently wrote on Nairametrics. So far in 2022, we've had $1.6 billion worth of hacks and money stolen from the decentralized finance space. I mean, I'm happy I'm actually speaking to a security company, right? So tell me, what do you think about these hacks? And do you think that this trend is going to continue? And what is your opinion on when we're going to see the end of this trend? And I asked you 3 questions there, but
Oh, no, all good. They're great questions. And
All right.
actually, what you just quoted, the number you just quoted is specifically on the decentralized side of things. But when we talk about overall cyber theft, the number is actually more than 10 times that number. I think we're estimated that in 2021, it's closer to 13 to 14 billion. And that has grown significantly. So if you look at the graph, you look at 2019, okay, where that number was in the area of 1 billion. And 2020, it grew to 3 billion. And then 2021, we're seeing significant growth. And the nature of that business, I mean, the concept of hacking, it's all about the ROI, the return on investment for a hacker. And as the assets in the space are growing, the allure of a hacker to actually cause damage, first of all, they want to receive the financial benefits, then they also want to cause potential damage, reputational damage, and other items to these companies. It becomes much more of a factor. And that's really, so if you look back in 2018, 2019, the way we looked at it is the junior hackers were playing in the space, all right? And now what we're seeing is the state level hackers are getting much more involved. And with all the geopolitical issues that have happened in the last few months, it becomes even more so. The amount of hacking events that have taken place from different geographical locations is becoming much, much higher. And that's going to grow. And keep in mind, the banks are really very much in the, and we say in a baseball term, the first inning with regard to of where they are in the crypto journey. Okay, a lot of the banks are talking about doing tokenization and other assets, but it's slowly but surely it's happening where they're getting now into the crypto space and regulation is becoming more a factor. So the hacking events are going to just go continue and rise as far as that's concerned. And that's why the need for a super secure system for financial institutions that value both their reputation and value the security of the customer's assets, that's where the GK8 solution really comes into play.
Awesome. Thank you so much for that. I mean, we're still speaking on this hacking thing. I mean, this year we saw the Axie Infinity bridge running hack, and also the fact that Binance was able to recover, I think about 80 million when they noticed the transaction was moving in. I wanted to ask what you think, or where do you think privacy coins, the Moneros and Zcash, where do you think they're going to be in the future, especially because of the fact that they help these hackers actually, get away with the funds, because crypto is traceable, right? We saw Binance being able to recover that amount of money. So, but with, platforms like Monero and Zcash, they can easily get away with it. So what do you think the future would be for platforms like that?
Awesome. And I'm going to address that question in a second, but you touched on a point that I just want to bring up, because you mentioned some of the hacks that have taken place. And the hacks that have taken place, putting aside the DeFi, which is the smart contract hacks that have taken place, which also the key management aspect of there is very important. But a lot of the hacks you mentioned, and another example is the liquid hack that happened in Asia. Those were done to hot wallets, to MPC solutions or multi-sig type of solutions. And that's why, even though our MPC, and we offer an MPC as part of the solution as well, and it's far more secure than anything else, we still don't recommend that you use an MPC solution for custody, for a large number of assets. The use case for using a hot wallet is for high frequency transactions, for trading. But when it comes to custody, those solutions need to be offline. They need to be providing, first of all, a true cold vault, okay? Because a lot of the solutions in the market today are not really cold, because they have at some point in the process the connection to the internet. And that's why the custody aspect, storing bulk of their assets, should always be in cold and offline. And that eliminates the risk factor. So again, when you're putting your assets in a hot wallet, okay, there's ways to mitigate the risk, but you can't eliminate the risk because it's an internet connected computer. And therefore, the exchanges as well are now learning that they need to keep their bulk of their assets, and the regulation is even somewhat enforcing some of those aspects to keep assets in cold. I mean, in Japan right now, they've come out with regulations that it has to be a truly air-gapped computer. BaFin has flip-flopped a bit. They started with an HSM hardware-based wallets. They started to allow more of the MPC type of world, but now they're back to also the hardware side. So we're seeing a trend, and it's a rightful trend, that security is becoming very, very important when you're storing the bulk of your assets. Now, to the fact that whether there are certain coins or certain blockchains that I don't want to use the word promote or allow maybe hackers to get away with things, as you put it. Again, I think that's going to be short-lived, as well as the regulations coming in now. And you're even seeing this in the US, and we're quite a bit in contact with the regulators. We have customers of ours that are OCC regulated already, FINMA regulated, BaFin regulated, and SEC now, where they're still working on the regulation side of things. You're going to see that there are going to be certain regulatory aspects that are not going to allow the hackers to really get away with this type of stuff, and maybe limit the use of some of the blockchains that are more prone to that.
Awesome. Thank you so much for that. I think, talking about these hacks, because, that's the growing question I get every time. When is it going to stop? Am I going to be next? What precautions do I need to take? But, to the average person, aside, of course, your solution, aside that, but what do you think is the major two things that they need to do to ensure that their cryptos are safe, in your own opinion?
So first of all, I mean, what we hear, I mean, the private individual, if you want to go down that path, I think it's a critical mistake if somebody is holding and sizable. The word sizable maybe means different things to different people, but to hold their own private keys and take the risk that, okay, they're going to forget their password, they're going to lose the key phrases, there's so many aspects of that's a risk factor for a private individual, their assets need to be stored with an institution that is someone that they can trust, that can provide the level of security and custody that they want for those assets. Now, okay, if they're holding a small amount of assets, I'm talking about 1 Bitcoin, 2 Bitcoin, 3 Bitcoin. I mean, the numbers, okay, the average hacker is not going to really be working that hard to steal your assets off of a Trezor or Ledger Nano if you have a small amount of assets. But if you are working with any kind of sizable amount of assets, then, and if you're a family office or you're a hedge fund, you can't afford to take the risks involved there. And you need to have the proper level of security. And insurance becomes a big play as well. All right. Again, you don't want to be in a scenario the same way you take out insurance on your car, on your house, and everything else that goes along with that, and on your fiat money as well, because you are having insurance there as well. The average individual wants to work with crypto in the same way that they're working with traditional finance. And the institution's challenge now, and it's not a challenge, they're working on it right now, is to make that for the B2C customer, to make the user experience as similar to what they're accustomed to, being able to log into their bank account or wherever it may be, being able to see balances side by side between their fiat and their Bitcoin and their Ethereum and whatever other aspects there are. Those are all things that are very important to the average individual, and that's exactly what we're going to play.
All right, thank you so much for that. I'm going to go into the last two questions. The first one is code staking. I think you mentioned something about code staking, so I wanted to put more light to that, explain what that does and everything.
Absolutely. So it's a very important point, because one of the key things when it comes to crypto assets is the ability to receive yield on crypto assets. And by the way, what I didn't mention earlier when I explained about GK8, we were actually acquired in November of last year by Celsius. Okay, Celsius is one of the largest players in the crypto space, providing yield generating, borrowing and lending, staking, DeFi. They work with all the aspects there. And by the way, we're stayed completely independent. So as a company, obviously Celsius is a large customer of ours, and they were a customer from the beginning, but we're staying completely independent as a company. But one of the things that appeal to them, obviously the security layers and everything else that we work with, but the ability to do something that's called cold staking. Okay, so in a typical staking environment, you need to put the assets in a hot wallet, and the validator, meaning the person who's going to be paying you the rewards, needs to be connected at all times to your hot wallet. Now, obviously, if you're putting sizable amounts of assets to stake, whether it be on something like Ethereum 2 or Cardano or Tezos or any of the protocols that provide the stake, you're putting your assets at risk, because again, you're putting your large amount of assets in the hot wallet. In the GK8 world, we have something called cold staking, which allows you to keep your assets in the cold vault. And what we're doing is we're simply delegating the stake to the validator, whereby the assets are never at risk. Okay, so you can't, since again, the cold vault is offline, the private key never leaves the cold vault, and therefore you still have the full security of cold solution, but still receiving the yield, and the yield can be issued and generated to a cold vault address. In other words, you can still be receiving the yield back to your cold address or your hot address or any address you want, but it provides the level of security that is, there's no one in the space that has that level.
Wow, that's really, really fantastic. I was going to touch about the acquisition by Celsius for 115 million. I think that's a very, very good milestone. But, since you already spoke about that, I'm going to move on to my next question, which is literally about your partnership with Metamask. So, when I first read that article, I was thinking, oh, you guys were integrating with the regular Metamask, but apparently there is an institution-grade Metamask. Can you please tell us more about this partnership with, Consensus, the company that created Metamask?
Absolutely. So Consensus and the Metamask institutional team have been great partners with us. So they came out with an institutional grade Metamask setup, where it's basically a web extension that provides a great experience for users to access DeFi protocols. And the beauty of the solution is, again, people are very much used to using a Metamask type of setup, and the user interface and the experience is very, very similar. But here, the added layer, because you need to have the security layer built into this, what we provide is the custody, because you're going to be moving assets between the wallet infrastructure of GK8 to the MetaMask world. That's seamless, and it provides a level of security that is huge. And secondly, one of the things that very much appealed when we did the partnership with MetaMask is the coin diversity that GK8 offers, where we offer Obviously, we support all ERC20 tokens, but we have generic support for all EVM protocols. So all Ethereum-based BBM protocols. That's a huge aspect that no other of our competitors are offering today. All right, there's some competitors that will offer Avalanche or Polygon or certain chains, but not the wide range of chains. Obviously, we support everyone across the board, Phantom, Avalanche, et cetera, et cetera. But if any EVM chain is out of the box supported by us, which means that if you're working with an MMI extension via GK8, you can be deploying assets on any of the DeFi protocols that are on the Ethereum network, which is really what consensus is all about, with the security layers of GK8. So it's really a great mix there. And we've received a tremendous amount of incoming requests now, because the space for DeFi, which again is another method of customers being able to receive yield on assets, is really a hot area right now. Because again, as opposed to a fiat interest that you'd be getting from your money in the bank, which is less than 1% in best case, here in yield, different depending on the DeFi protocols, you can be receiving anywhere from 5 to 50%, depending on the actual DeFi protocol.
All right, thank you so much, Mark. So I usually ask everybody I speak to this particular question, and the question is, what are your top 5 cryptocurrencies right now?
Okay, well, we're again, the depends on what your use case is, but obviously the given ones are things like Bitcoin and Ethereum. Those are obviously the hottest ones. We're seeing a tremendous amount of interest in coins like Tezos and IOTA. Okay. And the most recent one, which I do believe in quite a bit, is Near, which is the Near protocol. So if I had to put those in the top five, those would probably be in that area. And again, but it does depend on what you're looking to do. Some of them have staking capabilities, some of them, and then if you're going down the DeFi path, and there might be some other ones like Avalanche or Phantom or Polygon.
All right, thank you so much for that. Mark, it's a pleasure to have you on board. Thank you for coming, break it down, talking about the industry in general, talking about your product and what you offer. And, in general, the entire conversation was quite interesting and informative, and I'm sure our listeners would definitely enjoy this conversation. So I want to thank you so much for it. Just basically closing up and telling you thank you so much for, doing this. I know you have a busy schedule, and you're able to make the time and make yourself available to the Nairametrics platform in general to be able to talk about this. So I really want to appreciate you for that.
Thank you very much. We appreciate the invitation. It's been a pleasure to speak to you, and look forward to maybe continuing discussions down the road.
All right, awesome. Thank you so much, Mark.
Okay, awesome. Thank you very much.